fundamentally, as I say, consumers actually don't understand how to control their finances, and they're just not, and nobody's really educated them. So the truth is you should know about it. You should know what drives it. Nobody else has our mobile first Mogo Protect. Nobody else has that crypto account that we've got, and nobody else is presenting these in a way that actually help you get in control of your finances. So we think we've got a leadership position in a market that we have an opportunity to build a multi-billion-dollar business.
Hello and welcome to Crux Investor. We're here today with Greg Feller. He is the president of Mogo. You're a neobank or a digital challenger bank. Is that the way you describe yourself?
Yeah, there are a lot of terms in the industry that are being used here, but yeah, broadly we are effectively building a next-gen digital banking platform, very focused on millennials in Canada.
Right, okay, that's the first thing to say. You're Canadian focused at the moment. You're
Yes.
listed on the TSX V? Or
No,
TSX?
TSX and NASDAQ.
Fantastic, okay. So you originally set this up
Yep.
to target millennials.
Right.
So let's talk about that. So what was the plan? What was going on in the head when you set this up? And give us a bit of your background to explain.
So actually the company was started 16 years ago by my identical twin brother in Vancouver, which is where we're headquartered. And I was a co-founder, but I was a banker on Wall Street for 16 years. So I spent 16 years as a technology banker, Goldman Sachs and Lehman Brothers most of that time, Silicon Valley, New York, and London. I joined the company about 8 years ago when the whole fintech space was taking off. To really help raise the company, raise capital for the company, take the company public in Toronto. And really Mogo is really one of the original fintechs globally. Very, very few, if any, have been around as long as we have.
Right, so what I'm interested in is what was the plan? So what were you thinking? So what problem were you trying to solve?
Sure. So this was very early days of the internet, and we started off in lending. And it was still a big challenge to get a loan. A lot of paperwork in person.
Big challenge for who?
For consumers. For consumers to get a loan was a lot of work.
All consumers?
Yeah, I mean, you had to go into a bank, and it was a long process, and normally you had to go back and forth multiple times. And increasingly, things were being done on the internet that were faster and easier. And our view is that money, in a lot of ways, is the ultimate digital product in the sense that you really shouldn't have to physically go in anywhere. And so we wanted to really bring convenience to lending, bring it online initially. And we've gone from an online lender into a broad mobile financial solutions for consumers.
And so we talk about millennial in here, and that's kind of remember the conversation previously, because we talked about 2-3 years ago. That was the target audience,
That's right?
Because why? Because they are slightly...
Well, the millennials are more digitally minded, and so I mean, at the end of the day, if you sort of step back, you say, look, if you look at where we are in terms of whether it's buying on Amazon or everything that we do increasingly is all through a mobile phone, banking really is sort of one of the last major industries to go through digital transformation. And millennials want it as easy as any other product, whether it's an Uber product or anything else. They want their financial services as easy, mobile-first solution. But they're also looking, we believe, for better solutions than traditional banking products.
Right, so maybe I'll stop using the phrase millennial, and we'll start talking about digitally literate audiences.
Sure.
Okay, so you started with lending. Because there was a problem there and the business grew, presumably, and you started coming out with new services based on what your customers were telling you? I mean, how did you develop that?
Yeah, so if you look at it, banks have really been about, we believe, developing products that ultimately make them a lot of money. Okay, and traditional finance, consumer finance, has been a black box for most consumers. Most consumers don't actually understand how to manage their finances. They turn it over to an advisor, or they go to the bank and ask for help. And in a digital world and in a transparent world that we're in, we believe that's totally changing. We want to be on the leading edge. So that includes things like we were the first in Canada to give consumers their credit score. The credit score was a black box that the bank knew about, they didn't know about, and they were making fundamental decisions on whether to lend or not and what rate to lend to them.
Yeah.
We were the first in Canada to say, actually, here is your credit score, and here's what your credit score even means. And by the way, here's what drives your credit score. As an example, if you went to a bank to open up a bank account, they immediately did what's called a hard check on your bureau, and your credit score went down. And they didn't even give you your credit
Just
score.
by checking.
Just by checking. And the
Right.
theory is the more that you're out there talking to financial institutions, the more it's likely that you're shopping for credit, the more risky you are, right?
So that algorithm isn't necessarily accurate,
Exactly.
but it was there.
But it was there, and the
Okay.
consumers weren't aware of it. So the reality is the difference between being a prime and a non-prime consumer, which is reflected in your credit score, can cost you hundreds of thousands of dollars in additional interest expense. So how do we make sure a millennial coming out of college is aware of even their credit score? How do we make sure that they understand the difference between being a prime and a subprime? How do we get them smart right out of the gate so they're making smarter financial decisions? Including, and we're moving increasingly into saving and investing as well. Another great example, it took me 10 years before I started savings because I thought I didn't have enough money to move the needle. The reality is, if you just put $300 a month aside in a tax sheltered plan, over 40 years, you can get to over $1 million depending on the return. And just educating the consumer up front, making them aware of it, making it easier, will allow them to start making smarter financial decisions.
Let's come back a bit,
Yeah.
because I'm interested in the kind of first to market with the credit score
Okay.
component.
Yeah.
And most people wouldn't have known it existed because it was
Right.
a institutional
Yep.
product. Why did you want to tell people that it was important to know about credit? Why should they care about their credit score? Didn't they just go about their lives, and
Right.
if the institutions wanted to check up, they could? Why do you think people needed to do this?
Because, as I say, fundamentally, the institutions are making decisions. Should I give you a mortgage or not based on credit score?
Right.
And if you get a bad credit score for reasons you don't even know about,
Then you might want to.
your actual cost, as I say, the cost of being a non-prime consumer over your lifetime could be hundreds of thousands of dollars of additional interest expense on something as significant as getting a home.
Right.
So the truth is you should know about it. You should know what drives it.
Right.
You should understand it, and you need to monitor it. By the way, your credit score is your first line of defense in ID fraud detection, right? Basically, increasingly, as we say, it is a certainty that all of our IDs are going to be stolen. The question is, you have to stop somebody from using your credit
Right.
to go get a loan or mortgage in your name, and this is the first line of defense on something as important
Okay,
as that.
so the important thing that what I'm trying to get at
Yeah.
is, you've come up with a product to help educate
Right.
an audience who is financially illiterate. I think it's maybe a bit too strong, but
Yeah.
perhaps a little bit carefree with,
Yeah.
with some of those
or
things.
just not aware, right? Because
Right.
nobody's teaching it. It's not something that's actually taught.
Right, but today
Yeah.
that's prevalent. Lots
Yes.
of people offer credit scores.
Yeah.
You can get them online. You,
Right.
you pay a little bit of money and you get access,
Right.
or your banks
Yeah.
will give them to you for free. So
Yeah.
you were first to market,
Right.
raised your awareness, I imagine.
Absolutely.
Okay,
Yeah.
so that was great. But then everyone else started catching up. Like,
Yeah.
banks are catching
Sure,
up digitally
absolutely,
now. So
absolutely.
you always have to stay ahead. How are you doing
Yeah.
that?
So we continue to launch products, first of all, that are mobile first, all within the mobile app, and great digital user experience, and we believe that are innovative, that help the consumers that in a way banks aren't. As an example, the next product, the other product we launched was an ID fraud protection product, which is a monthly real-time monitoring, sends a push notification to your phone if there's any unusual activity on your bureau.
Right.
We were the first in Canada to do that in a mobile setting. So that, again, for a digital
First to
world, we
market.
believe very critical. We also launched the easiest and cheapest way to buy and sell Bitcoin in Canada, something that the banks aren't offering, and the traditional or the new crypto players made it very expensive, and we think weren't educating the consumer, and we're trying to do it in a smart way and make it very easy for millennials to be able to, or anybody to be able to access that.
Yeah.
We're right now in the middle of launching our Mogo Spend account. This is basically it's a prepaid Visa card, so it acts like a debit card.
Right.
And it's all about helping consumers control their spending. Our entire financial app is built around this concept of financial health or financial wellness.
Okay, so which we'll talk about. Yeah. I know you've got kind of 4 key pillars on that, but I just want to stick with the product development for now, because I'm trying to understand the type of business you are, the way that you and your twin brother think when driving this forward. So you're kind of first to market with a few products, but then again the market catches up and they become sort of commodities.
Right. But a lot of our products, they haven't caught up. So nobody else has our mobile first Mogo Protect. Nobody else has that crypto account that we've got, and nobody else is presenting these in a way that actually help you get in control of your finances.
Right.
And in fact, our card, nobody else has our card with our cash back. We also have a direct carbon offset on our card that we're launching, and nobody else is doing
What's
that.
Tell us
nobody else actually globally is doing that. So fundamentally, as you know, as we were talking earlier, we're talking about financial health. There is a financial crisis in North America. 55% of consumers carry credit card debt. And when they carry credit card debt, it means that they're not saving. Savings rate has gone from 20% down to 2% in Canada. Why is that? Well, it's because consumers have increasingly switched their spending to a credit card. Credit cards encourage you to spend more money than you have. And that is really driving this issue with consumers having credit card debt and not saving. So our card's all about using your own money because it's a prepaid Visa card. And giving you that control, the digital control in the app that you can actually control and be more mindful of your spending.
Right. So people haven't caught up with you yet on some products.
On the products or the way we're delivering them all. So as an example in this card, let's talk about our even the direct impact on the environment. The number one way all of us can actually impact the environment is reduce our consumption. Okay.
Yep.
Fundamentally, consumption is one of the biggest drivers. 70% of our carbon footprint is based on our consumption. The number one problem with financial health is consumers are overspending, which means they're over-consuming. So if we actually address that problem and they get their spending in control, by the way, they're having a direct impact on the environment as well. What we've also done is we've added a direct carbon offset on our card. So all of your spending that you actually do to put on our card, you will have a direct carbon offset on the card. Increasingly, that is where the next generation, millennials in particular, are focused. They are making purchasing decisions today based on environmental impact.
Right? Are they?
Absolutely. They are abandoning fast fashion companies like a Uniqlo or a Zara's because 75% of their products winding up in a landfill, as an example.
Okay, but those companies still exist and they still manage to churn out. So it's a case of certain audiences may have those characteristic traits, surely. So do you know who you're going after?
So I guess here's what I would say. As a whole, millennials absolutely are now starting to pick brands that they believe are doing good in the world, okay? And they're moving away from brands that they believe are doing bad. 2 weeks ago, big protest by millennials against Federer because Credit Suisse is sponsoring him and they're funding, hydrocarbon companies. So that is a very real issue today, number one. And we believe this is a lot more than just doing good for the environment. It's actually fundamentally where the economics of the business are going.
I would love to see those things married up because we've also talked to other CEOs about protests all around the world with mining companies specifically, where people are getting to these events and filming these events on materials dug out of the ground. So I think it's more about the ethical component, responsible component, which is what you're talking with carbon operate, rather and the amount we consume. And if there are audiences that are more cognizant of that and more conscious of that and genuinely behave rather than talk about it, that's a good thing. But look, I'm enjoying hearing the fact that you're innovative and setting the bar by which other people strive for. You're something to aim for. So that's great. So that gives us a sense of the type of company that you are. But it's out of necessity, right? Because you've got the big institutional banks. There's a lot of inertia. People can't be bothered. Once they sign up, they can't be bothered moving, and they're there for life. So to attract them, you've got to do more and more, not necessarily outlandish, but interesting things which kind of capture the imagination, and that seems to be what you're doing. Can you keep it going?
Look, we've been doing this now for over 15 years. We just announced the card literally last week, so that's brand new. And we've got a whole number of other developments on the horizon. We believe we're very early days. We're approaching 1 million members in Canada. We're signing up between 50 to 20,000 new members a month. So, you know, we
So
believe...
what's the adult population of Canada?
Well, the total population is about 37
but what's the adult?
37 million. So, I mean, over 20 million. You know, the biggest banks in
5%.
Canada have over 10 million accounts.
Well, that's what I'm getting to. It's
Yeah.
like you're going to sign these guys up,
Yeah.
and again, I want to get onto that in sequence, but
Yeah.
which we should, because I'm trying to work out the value
Sure.
of each of those. Because
Yeah.
that's a conversation we should have. Because
Right.
signing subscribers up and members
Yeah.
up, and then being inactive
Sure.
doesn't count for much,
Right.
right? So, but before we get there,
Yeah.
let's talk about these kind of 4 health checks, financial health checks
Right.
that you have. Well, I guess you've got it running throughout your organization.
So basically, we've distilled financial health down to 4 fundamental habits.
Okay.
Monitor and protect. Monitor your credit score, protect your ID from fraud. We
Okay.
have 2 products that address that.
Right.
Number 2, control your spending. The key to saving starts with controlling your spending, right? The key to not becoming a subprime customer starts with controlling your spending. 95% of all subprime consumers are there because they overspent on a credit card.
How do you
right?
do that without sounding like my dad?
Well, with our digital, our new digital spending account, which is a prepaid Visa card, studies show that you spend significantly less if you're using your own money. Being more mindful and aware of your spending, you automatically are in more control. So our card is not a credit card, which encourages overspending. You load your own money on it, and we have a digital. The account works in a digital way to give you a real-time view of your balance,
Okay.
your cash back, and spending control. Okay, and it's done on a real-time, constant
By category?
basis. Well, not by category, but just as simple as, you know, when I was in college, I had cash in my pocket, and I budgeted because I would literally pull out $40 of cash and say, I'm not going to have more money in my account till Monday, so I can't go out for dinner tonight.
Yeah.
As soon as I switch to a credit card, I never have to think about it. But with our card, it brings that kind of functionality of, hey, I see I have $500 left in my account, and I know I'm not putting more money on until a week from now. I'm going to actually not go out for that expensive dinner tonight.
Is there kind of learning curve there? Because I mean, I like that in theory, but
Yeah.
I tell you, you and I were very different students. Because I definitely overspent. So
Right.
how do you do that in a way, like we said, which doesn't
Right.
sound authoritarian or
Well,
get into the ethics
Yeah,
of
so we're trying to
spending?
make it fun and engaging. So
Right.
obviously, by the way, we're adding a cash back component on it, and it's a real time. At the end of every month, we deposit that money in your account. You know, we have this carbon offset. So, and we have these money classes built inside the app that help educate you. So
Okay.
again, the first product
Do people watch those?
they're actually just interactive, very easy to sort of.
But you must have numbers. Are people, lots of people?
Yeah, well, we just launched those, but actually we're getting very good feedback on
Okay.
it. Fundamentally, as I say, consumers actually don't understand how to control their finances, and they're just not and nobody's really educated them.
Right.
So when I came out of college, the first bank product I got was a credit card with a $7,000 available balance on it. What did I do? I thought it was like free money, and I spent it.
Yeah.
You know, the next generation, okay, are coming out. So my brother's son, his first card coming out of college is our Mogo prepaid Visa card. So he's always in control. He's always aware of his spending. He knows what his credit score is. He knows
Right.
he wants to keep it prime. So he's just educated up front, and he's making smarter decisions.
Okay.
Same thing. He now knows that if I put $300 a month aside, power of compounding, I could have $1 million after 40 years in savings. So he's starting to save as well. So you
Okay.
make them smarter up front. You make it easy for them to make smarter decisions,
Right.
and people will actually start.
Where's the
start
fun
doing
bit?
it.
You said you're going to make it fun.
Well, fun and engaging. I mean, we've got like a credit score. If you get over 800,
That's not fun.
We say you're a rock star. So we have this contest,
Okay,
the rock star
okay.
contest, and our app is kind of very cool and engaging.
Okay.
And so we're trying to make it cool and fun to get in control. Fundamentally, we've lived in a world where it's cool to overspend,
Yep.
okay, and have the latest running shoes. But the reality is, we actually think we're entering into a world where increasingly people are going to be saying, "Hey, wait a minute. Do you need those extra pair of running shoes? Why are you buying
Yeah.
that?" Right? People are
Okay.
becoming more conscious of their consumption.
You're trying to help them be more responsible consumers.
More responsible consumers, but it directly feeds into their own financial health too. Because if you're more responsible
Yeah.
and you're effectively living a more sustainable financial lifestyle, okay, which by the way has a direct impact and benefit on the environment as well. But the point is you have to link the two, because people aren't just going to do it for one piece of it, but we believe they will do it if they actually have financial benefits and other environmental benefits.
So who are you targeting? I know we're talking about millennials a lot, and it's not. It's digitally literate people, right? But the more I listen to you, the more I'm sold on getting that for my kids.
Yes.
Right?
Right.
Not necessarily for me,
Yeah.
because I'm past that now. But is that the line of attack, or do you go direct, or do you do all of the above?
Our brand is a very millennial-focused brand, which is a very differentiated brand from many of the banks in Canada. But as we say, millennial-focused brand actually appeals to a broader demographic, right? The digitally minded, which can include people that are older than millennials. The truth is, 2/3 of our members are millennials, 1/3 are older than millennials.
Okay.
And as you say, older people are actually thinking, oh, wait a minute, I want to get this for my kids as well. So it actually skews to a broader demographic.
Okay. That is 1, 2, and 3, and the fourth one is save.
Well, there is borrow responsibly is the third. So
borrow.
Access to credit still matters. Credit cards, the problem is it's not responsible credit. You make the minimum payment on your credit card, it'll take you 80 years to pay it off, and a lot of consumers only make the minimum payment. You're way better off having an amortizing loan, so we give you access to loans.
Okay. So you're not saying you shouldn't borrow. You can borrow, and you've got products for that?
Yes.
Right.
We have loan products for that. Yep.
But you are helping them be, again, responsible in how much they
our
borrow.
view is if you need a loan, make it a smart loan, make it an amortizing loan, right? So it pays off, and you will know that it's going to be paid off over a certain period of time. By the way, if you're making, if you show up on our doorstep and you have credit card debt, and we refinance it and give you a consolidation loan that pays it off over 3 years, and you're paying $300 a month, we'll say, hey, at the end of that 3 years, we'll say, hey, you're coming up to your maturity on your loan and you'll be paid off. Let's now take that $300 a month that you've been paying on a regular basis, and let's actually start investing that. So how do we take that same habit of allocating $300 a month and turn that into paying off debt to now investing?
I like that. Okay. And then
the last is save and invest wisely. So our plan there is to bring in, through partnerships, that's part of our model, savings and investing options for our members right inside the Mogo account, make it super easy. As an example, let's say you're using your card for your spend and you're getting $60 a month cash back. We'll say, hey, why don't you take that $60 a month cash back and start putting it into this investment fund, and educate you that at $300 a month you could be on track to retiring as a millionaire. And maybe the only investment you're starting right now is just the cash back. You're not putting anything else aside. But over time, we start sending you notices, hey, do you want to move that 60 to 100? So how do we make it easy for you to, again, start to make smarter decisions?
Right, okay. Understood. Nice and simple. You've got products for the full breadth of those 4 financial health checks, as it were. Right. And people can look it up. We'll put the PowerPoint link up on the video as well, because I just want to get on to the next thing, which is what we talked about earlier. Okay, you've got nearly, I read, 925,000 or 950,000. Right. What are they? Subscribers or members? What do you call them? Members. Okay. What do you need to do or be to be a member, and how do you value that?
So you have to open up an account. Okay, which means we have your whole bunch of your information, okay, and we also have your credit bureau. So this is more like opening up a bank account than, this is not an email address, right? So we have a lot of very valuable data. We are not selling any of that data. Our plan is instead to monetize those customers by offering them our own products that we believe can help them. This is a freemium model. So in a freemium model, you're never going to monetize 100% of your members, but those that decide you offer value and utility, they will start actually accessing your products. So we started off with loans. We added on free credit score. So if you showed up and you got a free credit score and you didn't need a loan, we had no way to monetize you. But now that we've brought on products like Mogo Protect, which is a monthly fraud detection, which we charge $9 a month for, that's a subscription product. We're adding on a broader breadth of loan products through partnership. So we're increasingly moving all of our lending off balance sheet. We have a mortgage product, and we're going to be bringing in an investing product, and we've got our card product. So increasingly, we have more ways to monetize our members within the Mogo account. Nice. Okay, right. So you've got quite a breadth there, including mortgages. That must be, I mean, can you break that down in terms of where the value and revenue is for you? So today, 50% of our revenue is coming from on-balance sheet lending.
Okay.
Although we're no longer growing that portion because we've signaled to the market that we're going to be moving all off balance sheet, and I can walk you through what that means. The other 50% is our subscription services revenue. So that's everything from I'm paying a monthly fee for my Mogo Protect, I'm getting a mortgage and Mogo gets an origination fee. We have no credit risk in that. Or I'm using, the Mogo card and we have interchange revenue on that.
Okay, I wondered where the
example.
mortgage component sits. That's a white label
So
solution.
yeah, so we effectively are a broker.
Right.
Okay.
Okay.
But we provide a digital experience right inside the Mogo account to get a mortgage. But we are a broker. It's funded through the banks. We have no credit risk ourselves.
Okay, so let's get to the money bit because that's why investors watch this show. You have been, well, apart from sort of a peak in beginning of 2018, bumping along.
Right.
Give or take $100 million bucks,
Yep.
right? So
Market cap. Yep.
market cap,
Yep.
yes, sorry. Not a lot of growth.
Yeah.
Okay, so
Not a lot of growth in.
in
stock price?
share price, right, and or market cap.
Yeah.
So I appreciate you've done a lot and you've spent a lot, right? So I read you spent $200 million bucks on creating products and building this thing, right? So you spent a lot of money, but twice the market cap. Okay, so where's the growth coming from? You're Canadian only. If I look at some of the multiples here in the UK, they are significantly higher than the multiples that you're seeing.
Right.
Why is that? What can you do about it? And what's that going to cost you?
Right. So I think you're referring to the private fintechs like the Monzos, the Revoluts of the world, which are you can think of Mogo as a Monzo of Canada.
Absolutely.
But these private players have the benefit of being private, where they haven't been held accountable on their economics. As an example, Monzo's got a $2 billion valuation, and we believe we have more revenue than Monzo does. Public company, they are valued differently. Our challenge as a public company, we believe from an investor perspective and a stock market perspective, has been that we started as a lending business, an on-balance sheet lending business. On-balance sheet lending doesn't get that fintech multiple, but we've been transitioning away from that, and I think it's investors starting to understand that transition, where we're going to start to see an increasing move from Mogo really being valued more along the lines of the other public fintechs, players like Square and that. As an example, when we went public 5 years ago, 100% of our revenue was lending. Today it's 50%, okay? We've told the market that lending is no longer going to be a growth product for us, and that we've announced last quarter that we're moving to a partnership model to take that off balance sheet.
How long does that take?
So we announced a pilot program with the largest non-prime lender in Canada. The way that'll work is when a consumer comes to Mogo, we'll say you're approved for a loan powered by XYZ Consumer Finance Company or XYZ Bank. They pay us an upfront origination fee, and then they pay us an ongoing platform fee. Okay. And so we effectively are going to be turning our on-balance sheet interest revenue into off-balance sheet recurring fee-based revenue. We expect to move that into a long-term partnership, and that announcement, people are speculating that it'll be sometime in the next quarter. And I think once investors start to see that this pilot's moving to a long-term agreement, and this shift to off-balance sheet is really starting to happen. I believe we're going to start to, get credit for that in the market.
That's one catalyst.
Yes.
What else is there?
So the other catalyst is we just announced this card. We haven't actually launched it to the public yet. It's in beta. That's going to start to roll out to our members later this quarter, and then to the broader public probably early in Q2. That's another big one, especially with this whole conversation on the environment. We're getting a lot of PR pickup on that, and we think that's going to be a really exciting product for our members and for, quite frankly, all Canadians. Nobody else has a product like that. We also plan to launch and announce a prime partner on our platform. So today we have a non-prime partner on the loans. We plan to have a prime partner that will be probably a bank in Canada. We expect to announce that probably in the first half of this year. We also are working on partnerships to bring investment options into the Mogo account, including a savings account. Also partnerships that we're working on this year. So we've got a lot going on.
Sounds like, yeah.
And I think as the market starts to see all of these things happening, they're going to start to understand that this is not the on-balance sheet lender that went public several years ago. This is very much a broad and diversified consumer fintech platform with a leadership position in Canada.
Great. Keep it simple for a retail audience here.
Yep.
You've got nearly, let's say it's nearly $1 million, million members. Okay. You currently monetize them in varying degrees.
Right. Our average revenue
How do you drive the average revenue
So our average
up?
revenue per member today is about $70, okay? Across our just over 900,000 members. So we're just under $70 million run rate of revenue today.
Mm-hmm.
The average revenue per member of the average credit union in Canada...
So it's going to be clear, that's over the lifetime, or is that per year?
Per
Got
year.
it. Okay.
Per year. The average revenue per member of the average credit union or regional bank in Canada is $1,300. We're at 70, they're at $1,300.
Okay.
As we continue to add on these products, right, that increase the potential share of wallet that we can have from these members, we believe over the next 5 years, we can get to $150 to $200 of revenue per member per year. We also believe we can grow our member base over the next 5 years to 2 to 3 million members, right? So, now you're talking about a $300 to $600 million revenue business in 5 years.
When you say these things, but how do you do that? 2 to 3 from 1 is a big shift in 5 years.
Right.
So
first of all, as I said, we've been growing our member base right now, over 30% a year. Okay. And that is without products like the card, which we believe has a much broader demographic appeal, right?
Okay.
So we're entering into products that we actually believe appeal to a much wider audience in Canada. As an example, some of the biggest banks in Canada have over 10 million accounts, okay, just to give you a sense. ING Direct, a lot of your viewers may remember them. They were the first online bank in Canada. Or globally, actually. They started in Canada. They built the Canadian business to 1.8 million members, and then Scotiabank acquired that business for about $3.5 billion, just the Canadian business. So we believe there's a multi-billion-dollar opportunity for Mogo in Canada. How do we continue to execute on that? We have a marketing partnership with the largest news media company in Canada that gets us $50 million of marketing spend a year for only $2 million of cash a year, okay, because we gave them warrants in our company. So we are acquiring our members today for about $20 per member. That same member, on an average, we're generating over $70 of revenue per member per year. So we believe we have one of the lowest, if not the lowest, customer acquisition costs in Canada. At scale, we're signing up 50 to 20,000 new members a month today. And we're continuing to increase our product set that we believe will allow us to drive higher average revenue per member, over the next several years.
So you don't have any retention issues because people don't use you? Do they stay on the database? They get counted? Or
if they don't use us in the next over the 12 months, they're no longer counted as a member.
So they've been falling away, or I don't know what the churn rate is, but tell me.
Middle single digit churn a quarter right now.
Okay.
The idea with the card is really drives daily user engagement, because if this becomes your everyday card, you're engaging with the app every day. And then that's when we have an opportunity to start monetizing you and all our other products that we've got on the account.
Right. Okay. So there's a little bit of churn, but you're picking up with this media group. You're picking up relatively inexpensive.
The net growth that 30% over 30%.
That's a net number. Okay.
That's a net of churn. Yeah.
Okay. Fantastic. So let's stick on the money side of things. So you're saying the private guys are seeing different types of multiples because they're private. They haven't got the restrictions perhaps that you have. But you've also got the restriction of it's Canada. It's maybe 20 million adults. I guess there's new adults or new. The audience that you're targeting coming on board every year, so there's a bit of growth there, but it's Canada only. Is that a big enough market for you to get to scale?
As I just went through that example, ING Direct, $3.5 billion, we're a $100 million market cap today. I think that's massive growth opportunity for any company. I mean, these fintechs here are getting $2 to $3 billion private valuations. For them to see that kind of growth here, they'd have to turn into one of the largest banks in the world. We believe we have a much stronger path to what we're doing in Canada than investors are going to see with some of these other players. The other key is competition. In the US, there are 4,000 fintechs battling it out. So yes, you may say that it's a bigger market, but you've got 4,000 players. In Canada, there's really only 2 players, us and one other player, that has raised a substantial amount of capital. And capital is a massive barrier to entry. So you mentioned earlier we've invested $200 million in the platform. We think that's a massive barrier to entry, and we've got now approaching 1 million members, and we've got a product suite that has 6 products. And we've got on top of that 200 million a marketing partnership that over the last several years we've invested over $200 million in the brand in Mogo in Canada. So we think we've got a leadership position in a market that we have an opportunity to build a multi-billion-dollar business with very little competition. So we feel very good about the upside opportunity for us.
So people over here hearing this story for the first time, and how would they, if they wanted to invest in Mogo?
Yeah,
can they?
Well, sure. I mean, unlike the private players we talked about here, like Monzo and Revolut, Mogo's a publicly traded company on the Toronto Stock Exchange, but we also are listed on NASDAQ as well. Toronto is our primary exchange, so there's more volume there, but investors can either buy on either exchange.
Okay. I mean, you're also here in the UK,
Yeah.
meeting a few people. I mean, do you have sort of ongoing discussions with institutional investors, or what's the purpose of the visit?
So look, there is a broader global fintech adoption trend, and increasingly you're seeing investors globally look to invest in that sector. We think we have a very unique value proposition, leadership position in it with a massive market opportunity, and clearly for us right now, it's about getting the word out. Making people aware of Mogo. We believe we continue to be one of the innovators in the space globally, and a unique opportunity for investors. We, as management, myself and our family own about 20% of the equity. We've never sold a single share, so we are very much aligned with our equity investors, so we think it's a great opportunity.
Greg. Great summary. Really enjoyed that. You've got a lot going on, a few catalysts, imminent catalysts, and let's hope those have the effect that you hope. And we look forward to staying in touch with you and keeping abreast of the story.
Great. Thank you.
Thank you.